Job costing and batch costing are two important specific order costing methods used in management accounting to accumulate, classify, and assign production costs to identifiable units of output. Unlike process costing, which is appropriate for continuous mass production, job and batch costing are applied where products or services are produced according to individual customer specifications or in distinct production batches. These costing methods enable organizations to determine product profitability, establish selling prices, control production costs, and evaluate operational performance. Consequently, they are widely used in industries where production is customized or undertaken in separate production runs. Characteristics of job costing and batch costing. Job costing is a costing method in which costs are accumulated separately for each individual job, contract, or customer order. Each job is regarded as a unique cost unit and receives its own job cost record. Direct materials, direct labor, and production overheads are traced or allocated specifically to that job until completion. Since every job differs in design, specifications, or customer requirements, production costs vary between jobs and must be recorded individually. Job costing possesses several distinctive characteristics. Production is undertaken against specific customer orders rather than for inventory. Work is usually non-repetitive and customized. Production periods may vary considerably between jobs, and costs are collected through individual job cost sheets. The profitability of each job can therefore be analyzed independently, allowing management to assess pricing policies and operational efficiency. Batch costing represents a variation of job costing, in which a group of identical units is treated as a single cost unit. Rather than calculating costs for each individual product, costs are accumulated for the entire batch and subsequently divided by the number of units produced to determine the average cost per unit. The principal characteristics of batch costing include production in predetermined quantities, identical units within each batch, accumulation of costs for the entire batch, and calculation of average unit costs after batch completion. Batch costing combines the flexibility of job costing with the efficiency associated with producing multiple identical units simultaneously. Appropriate applications of job and batch costing. The selection of job or batch costing depends upon the nature of production and customer requirements. Job costing is appropriate where products or services are highly customized and each assignment differs significantly from others. Industries commonly using job costing include construction companies, shipbuilding, aircraft manufacturing, consulting firms, legal services, engineering projects, architectural practices, advertising agencies, printing companies, and repair workshops. In these organizations, each contract or project possesses unique specifications requiring separate cost accumulation and profitability analysis. For example, a construction company building customized residential properties must determine the direct materials, labor, equipment hire, subcontractor charges, and allocated overheads associated with each individual project. Job costing enables management to monitor project profitability and control expenditure throughout the construction process. Batch costing is more appropriate where identical products are manufactured in groups before production switches to another product specification. Industries commonly employing batch costing include pharmaceutical manufacturing, bakeries, clothing production, furniture manufacturing, electronics assembly, food processing, and engineering component production. For example, a bakery producing 2,000 identical loaves of bread in one production run accumulates all material, labor, and overhead costs for the batch before calculating the average cost per loaf. Batch costing, therefore, provides an efficient method of determining unit costs, where products are homogeneous within each production batch. Cost records and accounts in job and batch costing. The principal accounting document used in job costing is the job cost sheet, which records all costs attributable to an individual job. The job cost sheet typically includes customer details, production specifications, material requisitions, labor hours worked, labor costs, overhead absorption, and total production cost. As production progresses, costs are continuously accumulated until the job is completed. Accounting entries follow the normal manufacturing cost flow. Direct materials issued to production are transferred from the materials inventory account to work in progress, WIP. Direct labor costs are similarly charged to WIP, while absorbed production overheads are allocated using predetermined overhead absorption rates. Upon job completion, accumulated costs are transferred from WIP to finished goods inventory and subsequently recognized as cost of sales when delivered to the customer. Batch costing employs similar accounting procedures, except that costs are accumulated for the entire batch rather than for individual units. Material requisitions, labor records, and overhead allocations are maintained for each batch number, facilitating inventory valuation and cost control. Establishing job and batch costs. The total cost of a job or batch consists of direct materials, direct labor, direct expenses, and absorbed production overheads. In job costing, this formula determines the total cost of an individual contract or assignment. Management may then add a desired profit margin to establish the selling price and evaluate contract profitability. In batch costing, the total batch cost is divided by the number of units produced. This calculation provides the average manufacturing cost of each unit within the batch and supports inventory valuation, pricing decisions, and profitability analysis. Overall, job and batch costing provide essential costing systems for organizations producing customized products or discrete production runs. By accurately accumulating direct costs and allocating overheads, these methods enable management accountants to determine product costs, control expenditure, evaluate profitability, support pricing strategies, and improve operational decision-making. Their application remains fundamental in industries where production is customer-specific or organized into identifiable batches rather than continuous mass production.